Hi, everyone, and welcome to today's CPE webcast, Lies Accountants Tell Themselves. This CPE session is brought to you by CPA Practice Advisor and Canopy. Canopy is a cloud-based accounting practice management software for accounting firms with CRM, document management, a client portal app, workflow, payments, and time and billing. This webinar will look at common and not so common lies accountants tell themselves, whether it's around work hours or running their business. What looks like an obvious truth, working more hours makes you more money, maybe nothing but. You'll hear from industry experts Ryan Lazanis, the founder of Future Firm, Don Brolin, author of The Designated Motivator, and Randy Crabtree, president of TriMerit. Each will bring tips and techniques for improving your business and telling the truth. My name is, did I not introduce myself? My name is Ozzie O'Bannon. I'm the managing editor of CPA Practice Advisor. I've worked with CPAs, tax professionals, small businesses, and technology firms for more than 25 years. Before we get started, I have a few housekeeping notes for you to earn your CPE and some other issues. The webcast will be 50 minutes. It qualifies for 1 CPE credit in the field of technology or business management and organization. During the webcast, there will be 3 polling questions, and you need to record an answer in each one. This is how we verify attendance and participation in the webinar for CPE purposes. After the webcast, there will be a post-event evaluation form. Filling out the form is optional, but you must click the submit button, as it is a required part to earn CPE. Once you submit it, the CPE certificate will be sent to the email you used to register for this event. Note, multiple people in your office can watch from the same monitor or other device, and you can all earn CPE for this session. To do so, at the end of the session, there'll be an opportunity for you to enter more information. If you have a question during the event, enter the question in the question box space on your screen, and the speakers will try to get to as many as they can, time allowing. Questions not addressed during the webcast may be followed up on afterwards. If you see a display that notes a number of questions answered, this does not refer to how many polling questions you've provided, but rather to the audience questions. All right, we're now going to get started. And so do you guys want to introduce yourselves? We've got Randy, Ryan, and Don.
Sure, you said Randy first.
Sorry, Ryan.
Go ahead. Appreciate it. Yeah, so Randy Crabtree, as Isaac said, just a little bit of background on me. I think it'll be pertinent to what we talk about today. I am a CPA. I was a managing partner of a generalist firm, I'll call it, for a long time, and actually sold that. I usually say merged and they bought me out, but technically I sold that firm 17 years ago and started TriMerit, which is a niche practice, a specialty firm, which I'm a huge proponent of niche. So that's, and as one thing Isaac said, president of TriMerit. Technically, I was managing partner for the first 10 years of TriMerit, and I gave that role up about 6 years ago, which is probably one of the best things I ever did. And we may talk about that a little bit today.
Go ahead, Don.
Okay, Ryan, you're so so my name's Don Brolin. I am the designated motivator and also the president of Powerful Accounting out of Windham, Connecticut. And we focus primarily on IRS representation and a very small group of clients. We're phasing out of the full-blown tax preparation firm. I think that the government just keeps on messing with us, and I can't stand that any longer. So we're moving in a little bit different of a direction, but really more than anything, I love to talk with practitioners about how they run their practice, what technologies they're using, and those kind of things, and hoping that people know at some point, you know, if you're doing the same thing over and over again, expecting different results, that's not going to work. So we've got to help you move forward and do some different things. And hopefully today, with this great group of people, we can make some traction and make some headway in your systems and what you're doing.
All right. And I'm Ryan Lazanis, everyone. I'm born and raised in Montreal, Canada. I'm a CPA. I started a firm called Zen Accounting about 10 years ago. It was one of the first online accounting firms in North America when I started it. And I took that firm from scratch all the way to acquisition. It was acquired by a large corporate services firm based out of Europe. That was acquired 5 years after I started it. And I immediately started Future Firm afterwards to help other firm owners systematize their firms so that they're earning more, working less. I send a newsletter to almost 10,000 firm leaders globally who just want tips, tricks, content, and template delivered to their inbox every single week to help them systematize their firm. And I've also been coaching. I now coach over 700 active students inside of our Future Firm Accelerate online coaching program who just want the system to help them reduce their workload while being able to scale their business up. So that's a little bit about myself. So I'll pass it over to you, Isaac.
All right, it's good to meet all of you guys. I've been around you guys, a couple of you, for quite some number of years. Anyway, we have a really interesting topic today, and it'll be good to get into it. I'm sure we all have different thoughts on what lies accountants tell themselves. Let's get into well, I mean, obviously lying isn't good, but we don't necessarily know we're doing it, I think, when it comes to business practices. And the basis of this discussion is on a recent survey that Canopy did on practice management. I think it shows some truths that might also be highlighting some of the lies we tell ourselves. So, this is kind of an interesting result. How would you describe your team's experience when it comes to using practice management to run your firm? And a lot of you think you're very sophisticated or sophisticated. I mean, nobody thinks they're behind the bell on this curve, huh?
I think it's an interesting statistic, and I guess what I see is that 86%, almost 9 out of 10 firm owners or partners or those running their firms feel that they're sophisticated when it comes to practice management. And I assume we're talking about practice management software here. What I typically see when I'm, and even in my own experience, I never really felt I had an amazing grasp over the practice management software aspect of things. It's almost a never-ending process to iterate and improve and get better. And I feel it's such a powerful tool, and it's probably the most powerful piece of software you could have in your firm. So I was a bit surprised to see these statistics, and I'd love to hear what Randy and Don says. But when I see almost 9 out of 10 think they're sophisticated when it comes to using practice management software in their firm, that to me is a little bit surprising, especially from the firms that I'm coaching. They're never typically super satisfied with what they have at the moment. So I'd love to see what Randy and Don have to say about that.
Yeah,
Don,
so I'll just jump in here. Yeah, I'll jump in because, from thinking about sophistication, right? So being sophisticated means, well, our firm is in a position where, we really need this, $100,000 practice management tool that they probably use 1/10 of out of that system, instead of getting a practice management tool that is functional, transparent, so that everyone in the firm has the ability to see what's going on. And I watch a lot of social media. I'm not necessarily always in there answering questions, but I'm in there reading what people are talking about. And I'm finding that people are still quite antiquated when it comes to their practice management system, and they're not even using it the way it was meant to be used. I feel like in some cases, there's pushback. There's pushback in saying, well, we just want to use this part of it, or we just want to use that part of it. And a lot of times I find that practitioners are only using it the way they think it should be being used, instead of listening to the expert, the people who develop the tool, and helping them really be able to use it at its maximum. And there's different reasons why practice management tools are better than others. But at the end of the day, everyone needs to have one. And not only do they need to have one, they need to maximize its usage. So I'm surprised by saying, okay, 86% are sophisticated. I think that might be a lie. I don't know, but I know for myself, I think, and I can take myself into consideration on that too, because I'm somebody who likes to just kind of do the things the way I want to do them. But I've learned over time that I've got to be listening to the people who know it the best, and that's the people who developed it. So I kind of think that the statistic was shocking to me as well, Ryan.
Yeah, I'm in the same boat as both of you. 86% seems very high to me. I'm very fortunate that I deal with a lot of firms around the country from all sizes, and everybody can make improvements for sure. For us personally, for Tri-Merit, our practice management tool is the most important thing. Ryan said it. It is the most important tool we have. And for a couple reasons. Growth is one. And not everybody has to grow, and grow, definition of growth could be different. You know, grow the bottom line, grow the top line, grow. But from a growth standpoint overall, you know, we as a company were listed as one of the 5,000 fastest growing companies in the U.S. last year. List is coming out again this August, so this month. I got a feeling we'll probably be on it again, and we couldn't have done it without having a sophisticated practice management tool that actually does everything for us. I mean, it's you know, practice management, CRM, marketing, all of it is tied to that tool. And what I see when I'm talking to these firms around the country is that I mean, hey, if your practice management tool has anything to do with pen and paper, you don't have a tool in place right now. So that's not sophistication. If it's Excel and Word, you're probably not having a sophisticated tool. You need something out there to help you. And what I see is that people think, hey, this has always worked. Let's just keep doing it this way. And they ignore the efficiencies that'll come out about making changes to be more efficient. Like Dawn says, to use the tool, the practice, the software, the way it's intended. And so, yeah, 86% thinking they're sophisticated are very great, but make sure you're analyzing that on an ongoing basis, because it's extreme. Again, reiterating what Ryan said, it's the most important thing you have to.
You know, I was actually going to kind of point out the same thing. It's okay if they think that they're sophisticated, as long as they're always striving to stay sophisticated, and really more than that, striving to stay as good as they can be. Now, I've got a quick point to make. We've had a couple of notes on the slide deck. If the slide deck does not work, it should be accessible under the resources tab. If for some reason it doesn't work for you, we'll be able to get it to you by email after the presentation. All right, I'm going to move the slide to the next. Move the next slide. In that survey that Canopy did, the respondents were then asked what elements of running a firm were the most important, and you can see there are a lot of differing responses. But the top three were accurately tracking time and expenses, maintaining secure data and information management, and client interactions and communication. Now, I want to start with you, Dawn. What are the truths and lies in these stats? Do you feel that those are accurate? And if not, what would you rate as the most important elements and why?
Well, I was shocked at this one as well. Well, I think I was shocked at all of them, to be honest. I'm like, who answered these questions? Because I look at the three options that we have here, and you know, when we were planning this presentation today, we're like, we all could speak to all of them. But I guess I would say I'm going to take time tracking, because that's what I'm going to do. But the time tracking and expenses, of course, is important. Of course, it's important. Depending upon the business structure and the model. So I'll use, for instance, accurately tracking time and expenses. I'll tell you, in 2017, I tracked my time religiously. I always tracked it. And I found that 65% of my time was being spent on administrative work. And I analyzed that and blew me away. So at that time, that information was valuable to me to make a decision to hire an executive assistant. So somebody that could take away even 35, 40% of that administrative time that I was focused on. So to say it's not important, it is. Do I think it is the most important element? No. Now at Powerful Accounting, we don't track our time. We because we bill it a different way. You know, we're using, I call it relationship pricing. So it's, you pay a certain amount a month. So to say, we should be tracking our expenses, by the way. We're accountants. So I think that was kind of funny. Like, that should be, how is that even a selection? Like, you're supposed to track your expenses. Hello. But I don't think it's one of the most important. I'm not saying it's irrelevant or that it's not an element of running the business, but it is not, in my opinion, should be one of the top three. So that's what I would say. Randy, I'll throw it to you.
All right. Well, so not to just keep agreeing with everybody, but this is the one that I think all three of us, when we looked at it, we were shocked that this was the most important element to running the firm, is the time tracking. I'll tell you this, when I had my generalist firm that I had for nearly 20 years before starting TriMerit, I didn't even track time back then. We were all, fixed fee projects for the most part. Now, was I good at it? No, I probably was under pricing, but with tools in place, you can figure that out. With TriMerit, we have 70 people. Nobody tracks their time. We haven't done it ever. We value bill basically everything we do. From a profitability standpoint, you can figure out if you're doing well or not. Overall is the most important thing, but efficiencies can be found in projects that are just too small to work on. You start to learn this stuff as you work at it, but spending time tracking your time, in my mind, is the worst. Is the biggest waste of time that you have. Expenses, obviously, Dawn, yes, I agree, but tracking time to me is so archaic for so many reasons, and one of them is just, I think it just puts a negative impact on everything we do, the employees, you, the clients. I won't expand on that because I could rant on it for hours, but I'm really surprised that's the most important. The rest of them, yeah, I agree with completely, but that being most important, I was a little shocked at.
Yeah, I'd agree with the both of you. I mean, my experience, we didn't have timesheets even from day one at our firm, and was able to grow it successfully to the point of acquisition. So obviously the business was doing well. So yeah, I'm not going to rehash what Don and Randy said. What I'm a bit surprised to see here, I think the maintaining secure data part is very important. The client interaction part is very important. Making sure we're managing projects and deadlines, obviously very important. I think if we just zoom out why we're in business in the first place and what makes a successful business is that we're creating value for our clients, for our customers, that we have a happy team that's able to kind of manage the workload so that we're not stuck in our business doing it all ourselves. I think these are some of the more important elements. So how do we create value? What's our packaging and pricing strategy look like? You know, what's our customer experience looking like? These are some of the things that I think we should be obsessing with a little bit more rather than, you know, managing documents and tracking time and these sorts of things. So we're kind of like looking at all the inputs here rather than the bigger overall picture. So that's what I'd say about this slide.
Okay, I'm going to move to the next. There was a follow-up question in the survey. The last question was, what was the most important? This one is, what is the most difficult? And two of the three were the same as those listed in the last slide: accurately tracking time and expenses, and attracting and retaining top talent, and also maintaining secure data and information management. Randy, as a partner in the firm, are these the most difficult things that you face?
You know what? I think I'm not going to go into time again. We're going to let that go, I think, for now. But for me, I think the most important thing, or the hardest thing for me personally, isn't even on any of those, was just learning that I don't have to do everything. As a leader of a firm, and just in general, as a professional in tax and accounting, we think we have to be an expert at everything. We have to manage it. We have to do everything. The clients are relying on us. It's us personally. And that's not something we have to do. It took me a long time to figure that out. But when I did, man, was that a huge, huge change. And I fought it for a little bit, but there's so many things you can automate. We just talked about that. You can delegate, you can eliminate. There's all these things you can do to be better. And it doesn't have to be you. I mentioned at the beginning that I was managing partner for the first 10 years. I look back of TriMerit. The first 10 years of that, I honestly am not good at that role. And it took me a long time to figure that out. And I didn't have to do that role. And when I switched out of that role, when I realized that there's different skills that I have that are much more important to me personally and to the firm, which is out educating, which is that kind of thing, that's when we took off growth-wise. When someone else got into the position of the KPIs and the processes and the procedures, which bores the heck out of me, when we found somebody else that can do that and I can go out and do my thing, that was the difficult thing to learn. But once I learned that was the most important step I ever took. And so it's not on this, but that for me personally was the biggest step I ever took. And it was the biggest positive step I ever took.
Ryan?
So Randy, what was the most difficult element then? Was it the delegation side of things?
It was the delegation. So you look at that, it was like, I have to do this because that's our mindset as accountants. I have to be the one. And that was the hard one. But boy, getting past that was huge.
Yeah, I think that's up there. I think that was one of my toughest things as well, how to delegate properly, and still learning how to do that, but a lot better than I used to be. I think the attracting and retaining talent, I think this survey nails that. I think the respondents nailed that response, because I think it's really tough to get good people and keep good people. I think if we look at the previous slide where, almost one half of respondents said that tracking time was their most important priority or something along those lines. I think the two go hand in hand. When I was running my firm, to attract talent, we did a lot of things opposite of other firms. And we really put that out there in our job posting as an example. So the no timesheets thing, that was front and center in our job posting. And we got a lot of quality applicants that were saying they were sick and tired of these sorts of things in their firm. So I think a lot of the challenge, a lot of the points that were important on the previous slide actually play into some of the more difficult elements that people are having trouble with. So when it comes to attracting and retaining talent, we have to obviously make it a very attractive firm to want to work for, and we need to promote that. And there's certain things that we have to get comfortable with, maybe that were important traditionally when running a firm, but maybe are not so important nowadays, especially to the talent that wants to come on board. So I'd say that the 33% are probably spot on. I think that's one of the toughest things right now, but there's things that we can do to improve that. But it comes with changing our mindset around. I'll pass it to you, Don, or no, we're going to the next slide, Isaac.
Did you want to input on that, Don?
I mean, Isaac, come on, right? Do I ever not want to give it? Let's be honest, right? But I do want to tell people, because people are saying in the Q&A here, we have not done the polling question. It's coming on the next slide, so don't freak out. You haven't missed anything. Whatever dinged off was probably Slack or something else. Who the heck knows? But you are good. Everyone's good. So I want to just comment on the maintaining secure data and information management, because this has now become quite a hot topic with publication 4557 that's come out, and the FTC guidelines and regulations around protecting personal identifiable information is a very difficult element of running your firm, because now you have to stop. You have to create a WISP, written information security plan. You better make sure that your devices, you've got the right malware, you've got the right antivirus, you've got to have all these things that I think is something that, listen, we just want to do our job. I don't want to deal with IT. I didn't go into business to be an IT expert. So you got to make sure you line yourself up, that you do protect yourself, that you're not accepting client emails with a W-2 attached to it, or a bank statement, or any of those things. Those are things we can't do. There's a great course, Randy Johnson's part of it. There's a bunch of us that did this course on something called The Grove. So it's a course called all about publication 4557. We give you a bunch of templates, but I think at the end of the day, that's a really difficult thing for firms to grab their arms around. And who the heck wants to even deal with it? None of us. But the government, because they are stepping on toes and we need to push them back, they are defining how we have to operate, which in some ways I understand, because this is serious stuff. People's identities being stolen is a very serious thing. So I just wanted to point out that I thought that statistic was also spot on, Ryan, as well as the attracting and retaining top talent. But all right, Isaac, let's launch this polling question.
Ding, ding, ding. Now is the first polling question. So yeah, what is your top business pain point? Cash flow, succession planning, tax management, or all of the above?
That's what we got. I mean, I think really top business pain point, there's so many. But, really at the end of the day, the more we can be streamlining our processes and be able to, make that all happen, it's a lot of work, man. It's a lot of work to run a firm, and it's a lot of work to service those clients, and it's a lot of work to keep and retain good talent, and it is not for the weary, right? And at the same time, Randy, keeping in mind that we've got to get better at, I say this cliche, work-life balance, but not even think of it as a concept, but as an action item. Figure out what are you passionate about outside of the office and get out of the office. And whatever that means for you, you don't have to work out at 6 a.m. or 6 p.m. You can, gosh darn it, you can go at noon if you want to, because guess what? It's your firm. Go ahead, Isaac.
if we can go ahead and get those polling results up, we've got some assistance on the tech side. I'm not sure if we're going to be able to see them, Don, Randy, and Ryan.
Yeah, I think someone's asking, how do we actually poll? Someone else, Don, is asking for a link to the course you mentioned.
Yeah, I'm getting that right now, and I'm going to answer that
Okay.
right away.
Okay, I'm hoping that the polling results are showing. I'm not seeing them. I see our technology.
Poll is out and the results are sent.
And the results are sent out.
Okay, we
Okay.
can proceed.
All right. So yeah. So now we're going to move on to client interactions. And am I there? Yes, I am. All right. So Canopy also asked about interactions with clients and found that accountants spend more time, or at least they say they spend more time working with clients than running their businesses, which is, I think it's probably a good thing, but maybe it isn't. Don, how important is balance between working with clients and running your business?
Yeah, this is a great question. I love this question because we've really made a shift in the model of our business, the Powerful Accounting, what we want to do. And we want to be working with the client and having all of the administrative items, as much of them as we can, be automated within the firm so that we can be spending more time with clients. It's really hard, especially I think more for tax preparers than it is for people providing client accounting services, because client accounting services, people are pretty much doing all year round, and they're talking with the client. They've got questions about their books, or they're researching a tool for them, or whatever it may be. But for those that do tax, I'm not going to call my $750 individual tax client throughout the year. And I still am not going to do that. But my point is that I have found that time blocking is a really good tool to be able to say, okay, every Monday from 9 to 11, I work on my business. It kicks off my week. I've got, I'm moving my business forward. And maybe it's more. It depends, obviously, on where you stand with your automation, with your tools, with your technology, and where you are. The more you can automate, the better. And I will definitely say 100% hiring a executive assistant. I call them executive assistant because without them, the firm will not run the same. You still need that human person who is constantly working, touching base with the client on what I'll call there's no accounting emergency, but non-critical items that they can solve for that I don't need to be involved. So I would just say that for me, having that assistant that can handle a lot of that administrative muscle so that you can be out there working with the clients. That's what we're here for, is to help the clients. What do you think, Ryan?
That's what we're in business for. We're here to help our clients. We're here to get results. We're here to drive value. The question is, who should be driving that value? Is it the accounting leader or is it the accounting team? I don't know if it makes sense to go to the next slide because it kind of feeds into this one. Up to you guys.
Yeah, why not?
Yeah. So here, this statistic, 87% felt their firms would grow faster if they spent more time with their clients. I think that's the complete opposite, actually. So in the previous slide, it said, accounting leaders are spending, almost half their time working with clients. So if we look at the next slide, this one here, you're not going to grow your firm faster if you're spending your time managing one-to-one relationships. As the leader of the business, you need to leverage yourself. And you cannot leverage yourself in one-to-one relationships. So contrary to what most firms do, I'd actually advise you to extract yourself from as much of those client relationships as possible, except for the things that you really enjoy doing. So if there's certain services you really love performing, or certain types of relationships you really love managing, then we want to maximize you're there to also enjoy what you're doing in your firm. But we also want to make sure you're not wasting if you're not great at bookkeeping, or if you're not great at tax, and if you don't like that kind of stuff, and you're doing all that yourself, and you think you're going to grow faster because you're spending more time with your clients doing that kind of stuff, that's the exact opposite, because you're not leveraging yourself. So in my firm, I was actually a really bad accountant. which kind of worked out to my advantage later on. But in the earlier days, it was tough when I started it all by myself. But I had to bring on experienced people. Like my first 2 hires were CPAs because I needed to get myself out of those situations as quickly as possible. And it worked out to my advantage, and we were able to grow faster than most because I was able to focus more on the business, more on strategy, more on marketing and sales. And as soon as the sale was made, the relationship would be passed off to the team so that they can handle it. A lot of people might not like the sound of that, but if you're thinking, if you want to grow faster, that's really the only way to grow faster, is to pull yourself out of those one-to-one relationships. So I don't know if you have any thoughts on that one, Randy.
Yeah, I do. And actually, I agree a lot with what you said, Ryan. And I agree with Dawn. I'm never going to disagree with Dawn because Dawn is one of my heroes. So I'm very fortunate, as I mentioned before. I know a lot of people in this profession, and I've talked to individuals. Here, I'll name 2 people. I'll name 4 people real quick. John Sensiba, managing partner of a firm called Sensiba, was Sensiba Sanfilippo. They're probably a top 100 firm. Richard Kopelman, managing partner of Aprio, which is a top 50, probably even 30 firm. Those 2 individuals I interviewed on my podcast like 3 years ago. And the really cool thing they both said, and now I'm talking big, they're bigger firms, but let me bear with me for a second. They both said they don't have any client responsibilities. The firm is their client. And both of those firms have grown tremendously under that leadership, under that model of managing the firm. And, Richard Kopelman, since I first met him 5 years ago, I think they've gone from, 75 million to 350 million. It's obviously worked. And those are big numbers. And I always thought it was the big firms that could do that because they have more resources and they can do this. But then I met individuals like Brandon Hall and Chase Berkey that started small firms. They're still small, but growing rapidly. And they have that same philosophy. With a $1 million, $2 million, $3 million firm, now they're each 6 million, 10 million, whatever. But their same philosophy is their responsibility is the firm, not the clients. As Ryan said, you have other individuals that can manage those relationships with the clients. It's still important as a firm, but I think having that leader that concentrates on the firm solely is going to make a really efficient firm. Whether efficiency is growth that you want or just, more free time, I think managing the firm is one of the biggest things you can do as the leader. And that was the question, as the leader of the firm, not managing the client relationship.
And there is a comment here that I would just like to address where someone says, disagree on the client relationship side. This is from Paul. A vast majority of my new clients are because the owner is totally absent and the subordinates, which is not really a word I like using, are either not competent or also not available. And yeah, that could be true. You could be taking over clients from firms that don't have a team in place that have been well trained, or they're low performers on the team that have been recruited, or there's not the proper systems or processes in place for when a client becomes a client that the team can handle the work. Obviously, we have to have a good team. We have to have good systems. We have to have good processes. We have to have good training. And if you have that in place, then your client really doesn't care who they deal with, as long as they're getting the work done and it's being done properly. And that was how it worked in my experience, where the relationship would just pass on over to the team. They were trained. There was processes. Sure, we weren't perfect, and obviously mistakes were made, but they were able to handle the work. And the client did not need to speak to me after that sale was made, because they had a competent team in place where the work was rolling out the door. So I would disagree with you on that one, Paul, if we set the business up properly. But if we don't, then we're going to get into the situation that you're finding yourself with people coming over to you because, it's low quality work that's going out the door and not on time.
I'm waiting for Dawn.
Oh, I'm good. No, we're good. I said it all,
All right, we'll move on to our second poll question. So ding, ding, everybody that's paying attention, you do need to answer these questions. Poll question number 2, do you believe that spending more time with clients will increase your business? Well, I think we've already heard pretty much what Randy and Ryan have to say about that. Expound on it a little more, Don.
Well, so I mean, the way I look at it is that I agree with what Ryan's saying is to try to pull yourself out. So and so I'll take the opposite approach of Randy and go and look at the smaller firms because I'm a small firm. There's only 3 of us in our firm. So it's hard for me to pull myself away and out of that position. But what I have been starting to do is partner up with other professionals. So saying, okay, listen, like I have a client, they've got 6 years of tax returns that need to be prepared, and there's trust returns involved. Time is out. Nope, not interested in doing trust returns. Reach out to my posse of other practitioners that Randy's actually in part of that group. And we just say, hey, who wants to do trust returns? Somebody raises their hand, bang, done, here you go. So I'm able to remove myself from a smaller firm perspective in a little bit of a way, but I'm still, because of the nature of the work we do, but we are now partnering more with other firms to partner up and having more conversations. So I know Randy and I, we've done some R&D credit stuff with Randy, and I'm like, Randy, listen, I've never had to do this. I've never had to do an amended return on an R&D credit. Can you help walk me through that? And Randy does that. He helps. Oh, yeah, no problem. Let's walk through it. I mean, I understand the concept, but there's a lot more that goes into amending a R&D credit tax return because there's all these stipulations and you got to say certain things and it's craziness. So I think that that's one other approach that people can take, especially in a smaller firm when they're trying to get, like I've got the Tracy, who's the client blocker. I've got Nicole, who handles all the client accounting services. And then myself and my tax partner, we kind of work together. So just try to think of that as well, especially if you're in a smaller situation.
Okay. I think the polls went out and everybody saw those results. Now, we're going to move on to growth, which was the next section that this survey covered. The survey also asked what advice accountants would give their younger selves to find success. Excuse me, I just had a glitch with my screen. The top piece of advice was to stay up to date with the latest accounting regulations and standards. Somebody click onto that next slide. The next 2 pieces were building a strong brand identity and a reputation and focus on providing exceptional service. So Randy, what advice would you give to your younger self?
Yeah, so I get asked this question a lot. I think it's because I'm on a lot of podcasts and it's a common question. And I honestly, when I answer it, I'm like, if I get to the spot I am today, I'm not going to go mess with the younger Randy because I like this spot. Now, was there a lot of bumps along the way? Oh, yeah, for sure. So if I could accelerate getting to where I am today, what would I do? I mean, there's so many things. I mean, when I was a generalist, going back to the things we said earlier, I wanted to help everybody. And so when you do that, well, when you first start your firm, this is one advice I give. When you first start your firm, what do? You grab every client that's going to pay you because you want money. And there's nothing wrong with that. But what I would do, instead of trying to be the expert at Burger Kings and dentists and hair salons and construction companies and all these different variety of industries, the one thing that I would tell my younger self is develop a niche. Find your passion. What do you like doing? Whether it's a service, you like dealing with, like Don says, R&D tax credits, or it's an industry, you like dealing with, restaurants, or it's a type of client. I like family owned, less than $5 million businesses or something like that. Find that niche, find that passion, that client you enjoy working with. And then doesn't mean you have to get rid of all your other clients immediately, but as you add new ones, try to have them fit that niche, that whatever that definition of things that you like. And so that's probably the biggest piece of advice I would have given young Randy is find that passion, find that niche. What clients do you like working with?
Don, Ryan?
I'll go ahead. I think the what I like to see here from this chart was the 38% develop a clear business plan and strategy. I find that this is lacking across most firms. And that was certainly something that was a big weakness of mine when I was running my firm. Even though we did well, we could have done better. But it distracted. There was a bit of a lack of focus at times that can become frustrating. You're not really sure what to do next, and you might lack a bit of a direction. And that became very clear to me, about 4.5 years into running my firm. When we start a business in the first place, it's to give ourselves opportunity, allow ourselves to make more money. But more than anything, I think it's to give ourselves freedom and flexibility. And we typically get into, when we start a firm, we just start accumulating clients, and then we start accumulating team members, and it just kind of snowballs into something. And we find ourselves with less freedom and flexibility than we had when we maybe even started the business in the first place. I think a lot of that could be solved if we have a clear plan of attack, if we have our eyes set on the prize, where we define what we want our life to look like, and we really clarify what does our ideal life look like, and we model the business around that ideal life. We really have to be intentional about that, and that can only come about with a clear strategic plan that we follow. And if not, the business usually snowballs into some kind of mess as it grows, and we find ourselves working long hours and enduring a lot of stress and maybe making less money than we would have expected. So I think having a strategy that we follow gives us focus, keeps our eyes set on the prize, allows us to make more money, allows us to reclaim our time back if we do it well. So I agree with that 38% number, and that's what I would tell my younger self to focus on, is have a better plan of attack if I was running my firm again.
Yeah, so both of those examples are great. I agree with Randy with the branding. And I think that the branding part is a really important piece when it comes to niching, whatever you want to call it. Because when someone knows you are the expert at R&D tax credits, it's a no-brainer. I'm like, okay, R&D tax credit, that's for Randy Crabtree, right? And so I know there's people who think, oh, Dawn Brolin, she loves fraud and IRS representation. That's what people think. I don't like fraud. That's not what I meant. But at the same time, and of course having the plan, and I love that, right? Because for me, like looking at it, that Ryan, and obviously you've built a business and sold it, and you've been through that whole process. Now you're trying to help other people grow it in that way, and those things are important. I think I would tell my younger self to charge more.
Yes.
Yes.
I think, when I first started out,
Yes.
I get why you might want to lowball it in the beginning, because you're still understanding and learning how to do the things you're doing. If you haven't come out of another firm and you just started on your own like I did, I didn't understand my value. And I really didn't understand my value till probably, I'm going to throw it out there, 5 years ago. And I've been in business for 24 years. The first 19, I was really good at learning by falling on my face and messing things up. And I didn't learn very well when I was doing things good, but I was really good at being bad. So I learned a whole bunch. And if I was to tell my younger self, if you understand your value and what you have to offer to the clients and what you can solve for them and whatever that may be, and there's a lot of different things you can do for clients. But if I understood what first of all, was really passionate about, what I was really good at, and I was not afraid to charge for it and worry about a client not coming to me, I would be in a whole different position right now than I am today. Now I'm recovering quickly, but if I was 29 years old and could do it again, I would have 100% not taken everybody that walked through the door and tried to figure out how to do everything. And I would have priced, as my tax partner says, price accordingly.
Okay.
Yeah.
I'm going to officially swap my answer and adopt Dawn's answer. And
Yes.
just to let you know, my first plans that were advertised on our website, I think it was like $150 a month, and you get everything. You got tax, you got books, you got unlimited consulting, you got literally everything. And very quickly, I found out that it was not sustainable. Yeah, but that's a great answer, Dawn.
Yeah.
I agree completely too. The billing part is huge.
And Jim made a comment or put a question, comment, whatever. Obviously depends on firm sizes. Totally agree with you. It's a different animal when you're a 3-person staff or a 300-person staff. We got those. That's a whole two very different conversations. But at the same time, he said, does it make sense to pull away from billing responsibilities, for instance, right? And billing responsibilities can be solved for by getting them into what I call the relationship pricing. It's $2,500 a month, and I whack you on the first of every month with an automated system, and I don't think about billing anymore. As a matter of fact, today, I had somebody that owed me some money from years ago, and I had to go in and like process the payment. It was so boring. Like I normally get excited about gathering money. I love to gather money. So, but at the same time, if you can get yourself away from that area, and Vanessa, I'm sorry, I want to answer this one too. How do you adjust for underbilling with long-time clients? And I love that question, Vanessa. And the way I approached it, because I had clients and all they did was pay for their tax returns. They paid us by the hour to do various things. And we just went to the friendlies first and said, okay, listen, there's a lot more we should be doing for you. Also, we're shrinking our client base. This was our conversation. We're shrinking our client base so we can serve you less people better. Again, this is what Powerful Accounting is doing. And we had that conversation with them, explained how here are the things we know we can do for you. But listen, at the end of the day, we're shrinking our client size. If you want to be on board with us, this is what it's going to take. And you think it's scary? It is a little scary. Let's be honest about it. It's an emotion. The goal is to take the emotion out of how you're making your adjustments. And when you get that one long-term client, Vanessa, that one long-term client who's like, I would love this. This would be awesome. You mean I can just call you and you're not going to bill me for it? Exactly. You're just paying it on the first of the month. It's about having that honest conversation with them. And we've had really, really amazing experiences with it. And Craig, and I have a whole course that I teach about how I did it. Doesn't mean that what I did was right, but what I did was something different. That's my biggest point. I stopped with hourly billing. We have new clients that call us. We had one last week. Hey, we want to work with you. Okay, well, guess what? This is how we operate. $2,500 a month for the first 6 months because we don't know you yet, and I bet there's a lot to do. He was like, that's too expensive. Okay, no problem. Not one feather was ruffled back here. Not one. So I think it's all a mindset, but man, if I would have a yacht instead of a 22-foot Grady White right now. I'm not saying I'm not a materialistic person. That's not what I'm saying. My point is that my financial situation would be a lot different if I had known today. So anybody especially those of you who are newer, this is your time to shine, make adjustments, do changes based on what we've talked about, and do better than we did.
On this next slide, it hints a little bit. You were talking about expanding your client base, and there comes a time to grow and value your own services more. And part of that is expanding and providing additional services, hopefully more lucrative services. So the survey found a combined about 81% say they want to expand their service offerings beyond traditional accounting and bookkeeping. Well, is it always necessary to expand them, or can you just, like you said, maybe do them better? Is there a place for just focusing on a particular element, specialties?
Yeah, definitely specialties and what you like to do. But for me, I found, and I don't know, and I always say this, I'm not really a big plant person. Like I probably kill half the plants that come into my house. But I understand that with plants, especially with rose bushes, when you cut them back, they grow better. So for us, and again, like Randy said in the beginning, growth can mean different things, right? So from a growth perspective to us was to shrink down the client base and grow the revenue by charging more and being able to laser focus. So for me, growth doesn't always have to mean more clients. I think people sometimes think, oh, I'm going to grow. I'm going to add more clients. I'm going to add more staff. It doesn't have to only be that. It can be changing what you're offering to your existing clients, defining how much you love that or don't love that, so that when new clients come in, you're like, well, this is how we're operating. This is what we do. This is what we offer. And if it's not a fit, who cares? I'm pretty sure the last time I came into this office and sat down and looked around and said, I got nothing to do today. Oh, that's been never. So anyway, that's my opinion on it. Ryan, what do you think?
Yeah, the way I looked at it at my firm was I didn't look at it in terms of like individual services, but I looked at it in terms of curating an experience for our clients. And, our value proposition was easy, pain-free accounting. And we had to create packages that provided clients with that kind of experience, that kind of experience. So we weren't really necessarily just selling bookkeeping or tax. We were selling the experience of, we're going to make your accounting easy and pain-free. So we had to kind of curate that experience in our packages. When I started the firm, cloud accounting was still pretty new. Online accounting was still pretty new. And I thought it would be easy enough for people to, just do their books on their own with a little bit of training. And we would do the taxes. We would do a little bit of virtual CFO services. That was the focus. We didn't want to touch bookkeeping. But what we found was there was a lot of pain that our clients had when it came to doing their own books. The books would come back late. Our other services would suffer as a result. They would not be accurate. There was a lot of back and forth. So to stay true to our value proposition, we had to add bookkeeping into the mix. That's how we added services. Is we determined what our value proposition is. We determined why clients wanted to sign up with us in the first place, and then we expanded the offering based on that. So that's kind of how I look at whether we want to add another service or not. Is what is that experience we want our clients to have, and how could we model out a package that will help get our clients there? And if that means adding another service, then so be it. So that's kind of how I'd look at it.
Okay, I do kind of want to push us along a little bit. I think we're getting maybe a little bit long. Okay, I did not mean to go yet to that poll question, but it'll come up real soon. All right, right now, do you anticipate increasing your investment in marketing or branding efforts? The survey found about 80% said they were planning to spend more on marketing and branding. Do you think they'll follow through on this? I mean, is that an area that accounting firms are loath to put money into?
Let me jump in on this real quick. So, yes, should they? Yes, but not. You have to have a plan. You have to have something to promote. You have to have a differentiator. You have to have the niche. You have to have an expertise. You have to have something. Just saying, hey, we're another CPA firm out here, look at our name, that's not going to do it. So from a marketing standpoint, I think it's huge. I think it's ignored a lot in firms. From a marketing standpoint, we as a firm have 6 or 7 full-time people in marketing. So for me personally, it's a huge thing, but we have a differentiator to market, and that's what you need. Not just say, hey, I do taxes and accounting. How's that going to make you look any different than anybody else? So you have to have a differentiator, but having a marketing plan, having a branding plan in place, I think is, and I know we're running out of time, but I think that's extremely important.
If Ryan or Don has something
Go ahead.
Okay. Let's move on to poll question number 3. How important is marketing to your business? Very important, somewhat, or not important? And where would you put it, Don?
Well, I think marketing, if you want to grow your client base, you got to be marketing. And the best way to do that, as Randy said before, is being in a niche. When you can say, I am an expert in this area, it is hard to be the jack of all trades. And, to try to be everything to one person or something like, I don't know what the saying is, but I definitely think from marketing is important, but it's how you do it and the way you position it that is the most critical, right? And so how are you promoting yourself? Ryan, what do you think?
I'd rate it a 9.5 out of 10 in terms of importance. But yeah, I agree obviously with Don and Randy. I think many firms struggle mightily in this area. I think, a lot are looking for that silver bullet. There are some simple marketing strategies out there that, we can double down on that tend to work well over time, like referral marketing. A lot of the others, like social media, SEO, that kind of stuff, it takes a long time to ramp up. It can take a long time to ramp up.
Okay, and we saw the results there. We're going to move on to work-life balance. This first stat is pretty impressive. 90% of accountants polled indicated they were satisfied with their work-life balance. I kind of question if it's a lie that we're telling ourselves, or if they're not quite truthful. I mean, it seems like, especially during times of the year, everybody deals with some kind of burnout. Randy, apparently this is an important topic to you.
Yeah, we don't have enough time to go into it right now because I can go for 2 hours on this, but I think we're lying to ourselves on this stat. I'm just going to come out and say it, that 61% are saying that they are satisfied with their work-life balance. I think I not to call people out, or even 90 are saying that overall that's good. I think they have to understand what work-life balance is. Being on vacation and returning an email is not balanced because I'm doing both. I'm on vacation and I'm working. We have to have this differentiator. We have, as a profession, I think it's 52% of us are dealing with burnout at some level. And this is the one that really gets me. As a profession, we are 25% more likely to develop depression than other professionals. So are we having good work-life balance? Obviously, I think our mindset of having to help everybody and being on 24. If you're looking at text messages and emails and Teams messages and Slack messages as 8 o'clock at night, you cannot be in one of those first two categories of definitely or probably. And so I think sometimes we don't really understand what a good work-life balance is, and we don't know that there's things that we can do different. So, man, I'd like to spend a whole 2 hours on this, but I'm going to defer.
I want to push this one to Ryan because he didn't get a chance to chime in much on the last couple. But Ryan, on average, when you're actively running your firm, how many hours were you averaging per week?
Myself, I was probably in the 40 to 45 range. We didn't do nights, weekends. We didn't have the crazy busy seasons. We did very well with capacity planning. That's one thing that I think we did really well at the firm is we didn't do time tracking, but we forecasted our time. So we didn't get caught into like any really terrible situations for the most part. So pretty normal work week. Thanks to capacity planning. I am surprised to see these numbers because, I mean, what is that? 50 plus 20. So it's like over 70% are, under 40 hours a week. Pretty impressive. I don't know, like many of the firms that are initially coming into our coaching program, they're working definitely more than 40 hours. They're trying to get it below the 40-hour threshold. So yeah, I am surprised to see this. I also wonder when this data was taken because it's going to vary during different points in the year. If we're taking this data during the summer months, then yeah, maybe that is accurate. But if we're taking it like an average throughout the year, I'd expect it to be closer to the 50-hour mark or probably even higher.
Okay, I think we are about to wrap up. I want to note that once again, the slide deck should be available in the resources tab. If not, we can get it to you by email. You can access the full report that we've been discussing today using that QR code. If any of these guests right now, Randy, Ryan, Don, want to have one last thought, you're welcome to chime in.
Well, all right. Two major things, and you heard me say it. I think niche is one of the biggest things we can do to talk about everything we did, and we didn't get into it much, but Don's done it. I know Ryan has talked about it, but I think the billing by hour is one of the worst things we can do as a profession. And I know there's things you have to, but if you change those two things, I think you'll build a much better firm.
There's probably a million things I could say, but I'm just going to take the 10 or 15 seconds or so to just plug myself. And if anyone wants tips, tricks to systematize their firm and reduce their workload, you can jump on my free newsletter, futurefirm.co/newsletter. Almost 10,000 readers on that globally, that people running their firms that want to run a better firm. So I'll pass it to you, Don.
Yeah, and I'll say the same thing. Somebody had mentioned something about a little bit more detail, but I run something called Don's Dugout because I am a volunteer college softball coach during tax season, which means I only work 30 to 35 hours a week because I got to be on the softball field. But if you just go to dawnbrolin.com, there's an events tab. You'll see Dawn's Dugout. You can register. It's just an opportunity to continue this conversation and any other conversations that you may have about running your firm or technology to use, or you just want to get fired up because that's what I do. Get people fired up and hopefully help them take action. And so I think at the end of the day, that's great. And if we want to see that grove, it's called, and I put it in the thingy, thegrove.thinkific, thinkific.com. You'll find that masterclass. If you just Google publication 4557, The Grove, you'll find that course. And it's pretty fun too. It's a little entertaining as well. You can just well imagine. Well, at least my section was entertaining.
You're always entertaining.
I hope to be.
All right. Well, I hope you all kept everyone entertained today. And I want to thank you, Don, Ryan, and Randy, and thank you, Canopy, for making this CPE webcast possible. And of course, thank you to the about 300 people we had attending today for the CPE credit. The attendees will now be presented with a post-event survey. It'll appear on their screen. And once again, you do need to submit the form, even if you submit it blank. The CPE certificate will then be sent to your email address. Look for a message in your email from webcast admin. If you had multiple attendees joining you from the same device or computer, and you also want them to get the CPE credit, please send their names and email addresses to me and Gail Perry. Our best email is editors@cpapracticeadvisor.com. That's editors, plural, at cpapracticeadvisor.com. The webcast will now end. Thank you.